So you probably have seen the headlines lately. GTA prices are dropping. The market is cooling. Even we've heard the word correction is being thrown around a bunch of times lately. But here's the thing. Ottawa's been pretty steady, quiet even. But don't let that fool you guys, because under the surface, things are actually starting to shift significantly. And if you're planning on buying, selling, or investing in the next 6 to 12 months, understanding these early changes could actually help you avoid a major misstep, or even spot opportunities before anyone else sees it, especially right now. This is a time of opportunity. Shifting market is the time of opportunity. So let's take a look at what's actually happening in Ottawa's housing market today. Who should be paying attention? And what can you do right now to stay one step ahead of this massive correction that we're seeing? All right, guys, so let's zoom out a little bit for a second. Across Ontario, cities like Hamilton, Mississauga, and even parts of the 905 are seeing big slowdowns. Inventory's up, sales are down, and prices are wobbling. And that's normal. This is a shifting market. We've been seeing this for the last year or so. But Ottawa still holding and strong, I might add, at least on the surface. See, in July 2025, we've had 1,318 home sales across the region. That's actually about 4.9% increase from last July of 2024. Now, sales were down, yes, a little bit from June, obviously, which is pretty normal of this time of the year with vacations, the massive Quebec holidays, the massive Quebec move, but overall, the numbers still look stable. The average sale price was just a little over $695,000, which is also up about 2.2% year over year. Nothing crazy, but definitely not crashing. We're not seeing the walls falling. But what is changing though? I can tell you, inventory is changing for sure. We've had 4,205 active new listings. That's 4,205 active new listings in July, and that's about 14% more than last year and over 23% higher than the 5-year average for this time of the year, which is normally holidays, but they're still up. More listings means more choice and more pressure on sellers. And the big question is demand actually keeping up? So far, kind of. The sale to new listing ratio is sitting at around 55.1%, which suggests a balanced market, but we're right on the edge. So we're not necessarily a buyer's market, but we're also not a seller's market. Right on the edge. We're tiptoeing on the edge. Let's talk about where we're seeing the cracks in the surface. Because while Ottawa's overall numbers look very stable, not every segment is performing the same. Now let's talk about condos for a bit. Yes, condos. Sales of apartments in July were down about 23% compared to last year. And prices actually dipped about 1.6%, which is not bad. Still pretty stable considering all the loom and gloom that we see. And that's sitting at around $411,900 on average. That's not just noise. That's a real shift, guys. Downtown condos are struggling the most. They are particularly sitting longer and longer on the market than the rest. Inventory is piling up, and we're seeing over 4.5 months of condo supply right now, which is edging into buyer's market territory. And that's normally what happens in a buyer's market. You'll start seeing the number of months of listings getting much more around the 4 to 6 month. Now let's talk about sellers who are actually holding out for those wild 2021 bidding wars. Those days, my friends, are gone. The average sale to list price right now is sitting at around 98.1%, which means homes are mostly selling under asking, and that's normal in a balanced market. And they are taking a little bit longer as well. The median days on market is about 24 days. Back in the pandemic, those were about maybe 5 to 7 days. If you are pricing too high right now, your home's probably just sitting. And when it sits, the next step is usually, you guessed it, a price cut. Then there is the buyers that are waiting for a crash. I hear this a lot lately. I'm just gonna wait until prices fall about 20 or 30%. We're seeing it in the GTA, blah, 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 blah. But guess what? Ottawa isn't built like that, my friend. We've got a stable job base. We've got high immigration, strong public sector. I mean, you can't go anywhere in Ottawa without hitting somebody that works for the government. So even if other cities are seeing steep drops, Ottawa tends to move slower and steadier. We might be waiting for a long time if you're waiting for that 20 to 30% discount, if you will. It's just not happening. So you're gonna tell me, Fady, who has the advantage right now? Can you just cut to the chase and tell us? Well, here's the good news. See, this isn't a bad market. It's just a different one. And we just gotta adapt and adjust. And depending on who you are, the shift could actually be a huge opportunity for some people. There's always opportunity in a shifting market. You just gotta be on the right side of it. So let's start with first-time home buyers and upsizers. See, townhomes are still a great entry point. They are more affordable than detached homes, of course, but also they offer more space and a lot more freedom than condos, and you don't have to worry about a board directing you and telling you what to do. See, in July, townhouse prices were sitting at around $468,000, and that's after an 8.3% jump from last year. And this is also including some condo townhouse prices with it. Yes, that's an increase, but it's still a big gap from that $852,000 average for a single family home. So if you're trying to step up, townhomes are your next move, my friend. Next, I'm going to talk a little bit more about the investors who are playing the long game. See, you've got a window right now. There is more inventory than normal, and sellers are actually a little bit more flexible. And if you can find aging properties like in places, for example, like Barhaven, Canada, Orleans, that just needs a little bit of cosmetics, a bit of updates, you know, a little bit of buffing, you're going to create some equity for sure. You do need to be careful, especially with the condo segment. This isn't where you want to be right now. But freeholds, yeah, with good bones and good potential, there is something to be said. That's the smart play right now. That's the money move. Now, if you're a seller, I definitely feel for you. Sellers who price right, you're still in a strong position. The average detached home in Ottawa sold for $852,619 in July. And many of those homes moved around 21 days on the market. So yes, the bidding wars maybe not there. They are absolutely gone. But if your property is clean, really well, staged very much to perfection, and priced at a very reasonable market price, it's still moving, and moving fast, I might add. 21 to 30 days is a very, very healthy sales market. So Fady, what should we do? What should we do now? Let's break it down for each one of you, for each one of those segments, because I know there's some of you buyers, some of you sellers, some of you condo guys. I'm gonna break it down for you. If you're a buyer, now is your time to negotiate. Look for homes that have been sitting on the market for 20 days or so. Sellers at this point, they're sick and tired of the showings every day. They are usually more open to offers that are making a good point. And very important, get yourself pre-approved before, especially right now, because interest rates might not go up today, but you never know. But we've seen how things quickly shift. So be prepared. Now, if you're a seller, you have to price with a strategy in mind, not emotion. Again, strategy, not emotion. I want you to start looking at recent comparables. Don't fool yourself with 2022 prices, a wish list, if you will. Focus on presentation, staging, hire good pro photography, good marketing. And if you're in the condo market, it might be worth listing sooner than you think. And the reason being because inventory is building and building and building further. So you're gonna be struggling trying to race to try to sell it. Now, if you're an investor, I want you to avoid high-rise condos for now. Instead, I want you to go after small freeholds that just need a little bit of cosmetic work. The key right now is buying below market, and I want you to hold a little bit longer than you should. Cash flow might be a little bit tight, but in the long term, appreciation and renovation equity are going to be the right play for you guys. So if you're even thinking about selling in the next year, I want you to do me one thing. I want you to drop the word guide in the comments, and what I'll do is I will personally send you my free Ottawa Sellers Guide, which is updated for 2025 strategies, real-time pricing insights, and everything that you need to know to make the most out of this move in this shifting market. No pressure, no fluff, just the good stuff, guys. So here's the bottom line. Ottawa's market is still strong, but it's evolving, and we are seeing more and more listings coming up. More balanced market than we are used to, and more strategy is needed on both sides of the aisle to make that deal happen. The buyers will need a strategy, and the sellers absolutely need a strategy. Whether you're buying, selling, or investing, the winners in this market are the ones who move with one thing in mind: the numbers, not the emotions. Again, the numbers, not the emotions. If this helped you guys, I'd love for you to give me that thumbs up, and I really hope that you can subscribe and hit that bell icon, because we are releasing videos like this weekly about real estate tips. And as always, I want you to feel free to book a one-on-one with myself or my team by using the link below in the description. And I want to take a moment and thank you so much for watching, and I'll see you on the next one.